The Toronto mortgage delinquency rate is hitting an 8-year high as the Toronto housing bubble crashes. And we're going to get into what exactly is going on, how it's a warning sign for the rest of Canada, and what is going on in the Canadian real estate super bubble that's imploding. So Toronto mortgage delinquency rate doubles, hits 8-year high. Toronto mortgage delinquencies double, highest rate since 2016. Toronto mortgage delinquencies are climbing at a very rapid rate as investors flee. This is such a crucial component because obviously investors were the main part of the market that drove this bubble higher and higher and higher. You've been led to believe a lie that it was all built on immigration and low interest rates. It was really built on speculation, and those things just contributed to the housing bubble, making it absolutely worse. But now you've got the thing that is completely imploding. So the rate climbed 0.02 points to 0.14% in Q1 2024, representing a 0.07 point increase since last year. Over the past year, the rate has doubled, hitting the highest level since 2016. And that may seem extremely low, and people may see, Luke, this is much to do about nothing here, because when you think about how low the delinquency rates are, there's not really that much substance there. But the thing that people forget is we've had a massive amount of people go into private lenders. So when you're looking at the mortgage delinquency rate here, you're looking at the mortgage delinquency rate at the chartered banks and financial institutions. And even that doesn't capture all the amounts of people that are defaulting. So the thing is, when you think about these booms that we've had in things like mortgage investment corporations, this delinquency doesn't even capture that. And the rates in that could be at 10, 15%, and likely are, because obviously if you've got distress emerging in this segment, then you know things are bad. And we've already been through the fact that when you go back and you look in the 1990s, how high the delinquency rate got according to the Bankers Association, you realize that, hey, this mortgage delinquency rate is completely fictional. So it may seem extremely low, but that's exactly the same way as it was back in the previous bust in the 1990s. What's very interesting is the trend and how fast this has been rising since 2022. And do you think it's going to continue to rise? Do you think a couple of rate cuts are really going to make the difference, even if they drop 100 basis points? And I just think that that is really silly to think that that is going to make a huge amount of difference. I mean, it's the speculative mentality that has been bred into this market that there's still a lot of FOMO. As John Flynn rightly says, great guy, great channel. He's always talking about the FOMO. We're always talking about the FOMO. And that fear of missing out is still there. You've still got a ton of people that are bred to believe, oh my God, this market's going to start turning at any given second. So it's very interesting what's going on. And then you've got Canadian mortgage borrowing pulls back after rate cut. This is incredibly interesting because obviously the banks and financial institutions rely on this whole Ponzi credit lending situation that they've had going now for 10, 15 years. So when lending really pulls back, that can create huge liquidity issues for the banks that people don't even realize are there. So you've got Canadian households now have over 2.19 trillion in mortgage debt, more than the entire economy. I mean, it just shows how big this bubble has really got, how much larger than anything else in the economy it really is. So Canadian mortgage credit remains astronomical in contrast to the size of its economy. Outstanding mortgage credit climbed 0.5%, 10.98 billion to 2.19 trillion in June. The balance has climbed 3.45% plus 73.18 billion since last year, a huge number in dollar terms, but a sharp pullback from the month prior. And you've got to remember, guys, as well, you've had this grow 3.45%. They're saying the CPI is at what, 2.7% or even less right now. And then you've got wage growth in real terms, which is negative. So when you've got credit growing that fast, people's incomes aren't growing with the credit, becomes a huge problem. But the slowdown could be a massive problem for the financial institutions because they rely on this Ponzi environment where they have to attract more and more people to borrow more more and more. And they've typically done this by levering people up, levering those up who actually have the assets. So they built this housing bubble on people who own lots of real estate. That's the really contrasting thing about this real estate bubble is you've got people that own 5, 10 houses, and then you've got people who own 0 houses, couldn't afford to even buy one house. Meanwhile, you got people who own multiple properties and they do not have the income to sustain all those payments and costs. So annual growth remains unusually low for Canada, and it may be heading lower. The 3.45% rate reported in June was slightly smaller than the month prior, and it sits just 0.05 points above January's multi-decade low just 5 months ago. Annual growth advanced at the slowest rate since 2001, and it may be heading even lower. So you really got to think people aren't borrowing. There's not loads of borrowers rushing into the market right now. There's not a lot of activity that is going on there from new demand going into the market. I mean, if you go to home builders, Calgary, Edmonton, anywhere in the country, quite frankly, you'll see that it's dead. It's dead. I speak to my contacts all the time who work in new construction, and they say there's nobody coming to these houses. There's nobody buying these houses, and construction is pretty much ground to a halt. So you have the main political parties like the Conservatives, the NDP, and also the Liberals who are saying we just need to build. We haven't got enough housing stock. But they don't take into account the millions of basement suites that have been added, and that just continues to go up and up and up because as the cost of living pressures have really hit home, more and more people have borrowed money to say, hey, let's do our basement up, rent it out because we can't afford our mortgage. That's happened in places like Calgary, Edmonton. You've especially seen that absolutely skyrocket to a point where like 30% of the houses on a single family home street have got basement suites and are renting them out. So you've got all this shadow inventory that people don't even talk about in Canada, and the main political parties, they don't have a clue what they're talking about. Let's be frank. So Canada household credit market debt to disposable income, been through this many of times. The deleveraging has already started, and that's showing no signs of slowing down now, as you've obviously got the mortgage borrowing that is pulling back to decade lows, multi-decade lows. So you know something is not going on. And even at those lows, guys, you've still got it above wage growth. So that just goes to show what's going on. And wage growth heavily skewed by those public sector jobs. If you exclude all the government manipulation out of the figures for the GDP, for the jobs numbers, for the wage growth numbers, you have a very fragmented, terrible economy that is in a recession, and it's going into a depression right now, unfortunately, as you see crime, civil unrest rise, and more people struggle, unfortunately. These aren't the things that I want to say. These are the reality. So more Canadians struggle to make ends meet. Statistics Canada says, so this is obviously the government coming out, so we know it's way worse than this. Nearly half of Canadians say rising prices are greatly affecting their ability to make ends meet, a significant jump from 2 years ago, according to a new Statistics Canada report. The report, using data from spring 2024 cycle of the Canadian Social Survey, shows that 45% of Canadians say they are struggling to meet their day-to-day expenses, and that's up from 33% in spring 2022. So it's now at nearly half. Half of Canadians are saying they can barely afford to make ends meet. And you wonder why credit growth keeps increasing, why things like credit card debt are skyrocketing right now, and the defaults on that credit card debt are going up. It's showing you how distressed the household is. The Bank of Canada, let me make this clear, are clueless morons. They are not coming to save all the debt slaves. If they were coming, they would have come 6-12 months ago, not right now when the trajectory of these lines going up because the amount of people defaulting is rising so quickly is skyrocketing, and they're coming in and saying, yeah, we're going to cut 25, we're maybe going to cut 50, 100 basis points. I really don't give a fuck. I don't care about the Bank of Canada because they are a useless entity. People put far too much focus on the Bank of Canada and the Federal Reserve, thinking that they're the center of everything when they actually control pretty much nothing. It's all I've said on this channel. The Bank of Canada follows the yield curve, not the yield curve follows the Bank of Canada. And that's what people forget. That's exactly how I predicted that rates were going up before they went up. It was because the yields were rising so quickly and the Bank of Canada had not even started increasing rates at that point. And you look at what's happening now, obviously yields are way, way lower than they were a year ago. So the data mirrors some aspects of the Bank of Canada's most recent quarterly survey of consumer expectations, which found that perceived financial stress remains high. I mean, they don't have a clue. They have no idea. They are completely behind the curve, useless institution. I believe it's good that they're there in a way, so I don't want to bash them too much because I believe if the monetary policy was purely in the hands of the government, then it would be an even worse situation because the political classes, whether it's Pierre, Trudeau, Jagmeet, are just literally swaying to whichever way the political winds are blowing. So we would have an absolute disaster. At least the political classes can use the Bank of Canada for cover. That's about the only use the Bank of Canada has, but it's definitely not independent in my opinion. Even though a much greater proportion say rising prices are affecting their daily bottom line than 2 years ago, the proportion of Canadians saying most days are quite a bit or extremely stressful due to financial concerns has changed little since 2022, rising from 33% to 35%. And that just goes to show how bad people's health are getting affected by all this as well. Because obviously, if people are stressed, you wonder why the birth rate is so low. You wonder why people are getting all these chronic diseases. Stress is the ultimate thing that will impact your health more than anything else, as many people will know, as I even know myself. So it's incredibly interesting when you get these things. It's saddening as well because it's shortening a lot of people's lives. But the thing is, this is all just part of a cycle, and it's not my ability to control the cycle. I'm just going to tell you how it is, as I always do, and I'm not going to hold back, obviously, if things are really bad and getting worse, which is what's happening. So obviously the unemployment rate is going to continue to go up despite what they say. They're skewing the numbers heavily with public jobs, propping it up. They give us a sense of where the trend is going, but by no means do I believe these numbers. And the trend is just going higher and higher, and we've seen more and more manipulation, and you're just going to see more and more losses come. You're going to see more people taking losses, and it's even the rich, it's even the more wealthy people that are taking huge losses, that are having to accept massive discounts on big homes because guess what? That demand just really isn't there. So a custom home with feng shui design sold $800,000 under the asking price in Mississauga. The home at 2086 Autumn Breeze Drive South in Cooksville sold for just under $4 million on July 23rd, under the $4.8 million list price according to Housing Sigma. It was listed for sale in April. The home is one of many to sell under asking price as the real estate market remains cool. An Oshawa home sold for a $300,000 loss, and a modern home sold for a $348,000 under the asking price in Mississauga. So you've got incredible amounts of discounts that you're already beginning to see because the housing bubble is bursting. So let's quickly just see what's going on from the Wall Street report across Canada now. So interesting, the Canada home prices have been pretty much flat, but if you add inflation, because this is all nominal, then it's gone way lower. So you're actually lower than before 2020. So you're going back to 2019 levels in real terms because of the inflation. So you've got Toronto pretty much flat month over month. You've got Toronto condos that is pretty much flat down slightly. You've got Hamilton Burlington kind of up, but still way off the peak there. You've also got Hamilton Burlington condos that is down. So condos being hit especially hard, which is a sign of investors pulling out of the market because condos incredibly speculative and just a scam in my opinion. You've got Vancouver single family homes up slightly. You've got Vancouver condos, which is down. You've got Victoria, which is pretty much doing nothing. So they're all kind of just holding prices apart from, you know, Calgary Calgary and Edmonton, which didn't really see that parabolic rise that other markets saw. You got Edmonton doing the same, heading to all-time highs, and then you got condos nowhere near all-time highs. You got Quebec City that is punching new all-time highs. It's generally those more affordable markets that are attracting people in, and I would say that's probably where you're seeing a lot of the FOMO going, as well as the speculation. You've got an incredible amount of speculation going on in places like Calgary and Edmonton that's distorting the market massively. So the Canadian real estate bubble continues to implode. The economic data just keeps getting worse. So anyway, if you've enjoyed this video, I'd highly recommend that you check out this video here. If you're looking for a VPN to protect your privacy, you know where to go. Go to expressvpn.com/market mania. That's the VPN that I use. There's an affiliate link in the description, and I will see you guys in the next one. Take care of you.